Hey guys, just want to come on here and do a little weekly review and weekly outlook for next week. So first things first, starting with the economic calendar, as always. We didn't have news Monday, so I let Monday print. And then I was really focused on Tuesday, this 10 o'clock red folder, and we'll head down into the charts. So I always start on the weekly chart, and we can already see how last week's candle printed. This week currently opened. So as you can see, we're well above all-time highs. There is no real draw on liquidity, and when we're at all-time highs, it's best to just long until they give you shorts. So if I go down to a daily chart, pop on HYPOTHETICAL 20. HYPOTHETICAL 20 is the last 20 trading days on the daily chart, and as you can see, we're in a premium with no real draw on liquidity to our left, so this is uncharted territory. So if we look at Tuesday, you can see we can draw a previous day high and previous day low, and then I'll drop down to like a 4-hour chart. And as you can see, at 6 o'clock, the 6 o'clock hourly H4 candle is already above previous day high, and as we go into 10 o'clock, it is in all-time high territory. Even more refined, we'll go down to an hourly chart, and we'll look for Tuesday midnight open, and we'll use that as a premium discount level. So this is how Tuesday opened, and we're above midnight open. When we're above midnight open, I'll use 8:30 open for another premium discount level and a manipulation level. So since we're above midnight and we're making longs, as you can see, we basically swept this low, then 9:30 open, it rallies higher, and I'll mark out 10 o'clock high impact news. So we make this leg long at 9:30, and since this 10 o'clock didn't really go above this leg, and we just come back down into 50% fair value gap right here, you enter here, and since we're at all-time highs, there's nothing to target, so you enter here, stop below the low, target standard deviation. Minus 0.5, which means from low to high, if you take that, that's what it looks like. So that's half, and that's a full standard deviation of that leg. So no need to target -1 if minus 0.5 gives you around 2R, and that's ended up what happening. And then heading into 10:30, we make another long here. Same thing, low to high, enter here, stop below the low. 0.5 is not a 2R, so you can go ahead and target that -1, and it ended up hitting after hours. So that's the protocol for all-time highs. If there's no drawn liquidity, you take the leg and you target standard deviations. So back to the calendar. Wednesday we had 8:15 news. Didn't really have high expectations on Wednesday because it's pre-market news. Usually the 8:30 news is what really makes a good move. But the protocol stays the same. I'm drawing midnight open. We're above midnight open, so we're in premium, and then I'll draw 8:30 open. And then you can kind of see how they use 8:30 open. The bodies are rejecting it. Then we sweep this low here. No real displacement. We have this fair value gap here, and I'll explain why this is not a model. So when you take a fair value gap and you're taking the 2022 model, you want to break structure with a fair value gap, meaning you see how these fair value gaps, I can look to the left and see a swing high, and there's imbalances within that. That's called a market structure shift, and that's why I didn't take this fair value gap here at 10:30, because it didn't break structure to the left. So I'm viewing all of pre-market up until 9:30. This is the Judas swing. If you look to the left here, there's this little imbalance. We respect that at 9:30. Then we make a leg long here. I was looking for this fair value gap, looking for these highs. However, we didn't. I was giving it up to 12 o'clock to retrace, but as soon as I saw we made another model here, I canceled my limit orders, and I'm not interested in taking 11 o'clock setups unless it's Thursday and Friday. And as you can see here, that's exactly why. They run the stops during lunch and then rip it in the afternoon. So no trade on Wednesday, but you can still use everything I taught to make a narrative for when to filter setups and when to take a high probability setup. So now we're on to Thursday. Thursday before NFP is a little tricky because they'll often build up liquidity on both sides, and then the high impact news, non-farm payroll on Friday, they'll run both sides of the market, and then Friday is usually the real move. So manipulation, distribution with the 10 o'clock news on Friday. But same thing, Thursday, midnight open. We have 8:30 news, so I'll draw 8:30 open as well. Now, I want you to think about how I said I only take 11 o'clock setups on Thursday and Friday, and that's exactly what happened this week. Thursday was actually the best trade of the week, and it happened 11 o'clock. So midnight open, look at all this sell side built up. 8:30, they use that to sweep liquidity, and right here at the 950 910 macro, we make a long from low to high. It breaks structure, and the setups that are right before 9:30 are always a little hit or miss, because sometimes they'll use the 9:30 to distribute price from these pre-market setups, but however this time they just used it to manipulate both sides of the market. As you can see here, they trapped both sides at 9:30, then they printed price really high into all-time highs, well above midnight and 8:30 open, and then we make this leg here at 10:30, but notice again, it's not breaking any structure. There's no market structure shift, so there's nothing to take there. And then at 10:30 again, we make this, but it actually breaks structure. There's a market structure shift right here. Low to high, there's your entry here. Stop above the low. you can target 0.5 for about 2R right there. So that was Thursday's trade. This long into all-time high, target the standard deviation. If you missed that, then they also had this 11 o'clock setup here, right, just like that. Whenever there's two fair value gaps like this, I always take the lower one because they don't have to price it to this higher one, and that's exactly what happened here. They took it to the lower one because it's already such a deep premium above 8:30 open and midnight open, and then you can target all this sell side liquidity. If you split the range here, target this imbalance in premium. So that was Thursday. Ideally, you took this 11 o'clock trade. You're not really too interested in the longs, but at all-time highs, I'm longing pretty much everything until it shows me it wants shorts, just like it did on Thursday. And then Friday we had non-farm payroll, the red 8:30 news, followed by the 10 o'clock orange news. Same thing, midnight open. $8:30 open. We make a long here. We sweep these sell side liquidity pools. Fair value gap at 50%. There's a little imbalance, so I'll draw it from there. And notice how 8:30 open kind of lines up with the OTE here. Lines up with that 0.62. And if I draw the wick here, you can see how the wick here is, the bodies are respecting 50% of that wick. That's the last discount array that it can respect here before seeking lower prices. If we were to close below that 50% on the wick and started making displacement lower, then that's when this sell side liquidity below midnight would make sense. But if the market is continually giving you long setups, keep longing until they show their hand short. I had a hard time with this because ICT is very precise, so when you target things, or when you have nothing to target and there's no context above you, it's kind of tricky. So at all-time highs, the best rule of thumb is take long setups until they fail, and that's exactly what this week pretty much was. So again, at all-time highs, here's your entry on the fair value gap, stop below the low. 0.5 doesn't give you that 2R, but minus 0.1 does. There you go. There's your long there. If you miss that, then I'm waiting until 9:30. See how the bodies respect that, and then 9:30 open comes, and that's the distribution phase. And for this, just like that, enter here, stop below the low. Minus 0.5 doesn't give you that, but minus 0.1 around 2R. So the first two setups of the session, 8:30 and 9:30, give you plenty of opportunities to get in. Now, usually if I'm long here and we didn't respect that wick, 9:30 would have knifed short and we would have got shorts, but it's continuing and respecting the 8:30 pre-market model, and at all-time highs there's no real target, so you just target standard deviations and then let the rest ride out. I mean, this thing ran for over 400 points with no real targets to the left. They just printed higher price. So that's kind of the method at all-time highs. Now, for the weekly outlook portion of this video, we'll go into next week's calendar. we have CPI, and they're voting in a new Fed chair, and I believe that this new Fed chairman they're going to use him as the fall guy for, you know, seeking all the sell side liquidity pools. Anytime there's a Fed chairman or a Fed like FOMC, that usually has a big impact on the market because they use inflation numbers and all that to price in the market. And then Wednesday we have red folder A30 PPI, and then Thursday same thing. So this week should be fruitful. Go down into a weekly chart. So we have no real target. I'm using previous week high and previous week low, and we also have this little volume imbalance within that. And then I'll go down to a daily chart. I can refine this so I can draw this imbalance here. So probably looking for an early manipulation on Monday above previous day high, and then they'll use Tuesday A30 news and we'll probably seek lower prices. So we have previous week low, previous week high, and now I'm going to use previous day high and previous day low. That's the framework I love to use because they can't hide daily highs and lows or weekly highs and lows. So these are the levels I'm interested in, and we'll probably see where we're at by Tuesday morning. I'll share some levels, and probably using these levels for targets. We have a bunch of sell side that we can seek. If they keep printing long, then I have no problem taking long setups until they fail. Don't force shorts. If they keep making longs and keep printing money, then they'll keep printing money. That's not our problem. We just gotta catch the ride. But here are my levels, and good luck and good trading.